Hello everyone, I am Rohit Shah from Foodtech VC Fund. We invest in pre-seed stage in agri-tech and food tech startup. And today's our topic is investment in food tech startups. And our guest is Nilesh Lele, a very good friend of ours who has recommended 100 plus startups uh, to us and also has invested in 100 plus startups. So I'm just welcome Nilesh sir.
Thank you. Thank you, Rohitji.
Hello. Yes. Hello, sir. How are you?
I'm doing good. And good
Good.
evening or good afternoon, good morning, wherever all your viewers are. Very happy to be here on this platform.
Yes. So, sir, could you just shortly introduce yourself for our audience?
Sure. So, my name is Nilesh Lele. By education, I'm a chemical engineer, followed by MS and MBA from University of Oklahoma in the US. Spent many years in the banking industry as a vice president with Barclays Capital as well as Deutsche Bank in US as well as in India. I'm a CFA as well as FRM charter holder. Since moving back to India 13 years ago, I've been involved in various things, predominantly in the startup space. Have handheld and mentored many startups, especially in the food tech, agri-tech space. Also associated with various incubators, incubation centers. Uh, at IIT Mandi with their human computer interface HCI Hub, I am also an advisor associated with AIC, ADT, Baramati, and few other incubators across India. I'm very happy to be here and talking to you and looking forward for this opportunity to share my thoughts with regards to startup.
Yes. So, about Nilesh, sir, we have heard a lot from various, mainly the investors, incubators, and also they recommend very good startups. So that is why we invited him, and he has a part of investment in 100 plus startups. So that's a big number, and fully focus on food tech startups. So, and we have seen that they also bring a lot of connections to make the startup grow. So, before going ahead, so like as an investor, when we invest in food tech startups, so what will be our primary aim? So, like how much return we should expect? What are the timelines? So, could you give a basic idea for to our audience?
Definitely. So when we invest or we advise investing in any startup, we
Okay.
use a 5 point kind of a questionnaire or a model with regards to whether to invest in that startup or not. The first step, obviously, is to see whether there is some niche or first mover or something innovative about that startup. It's a hut game, not a me too, not a red ocean kind of a strategy startup, but more of a blue ocean kind of a strategy startup. It could have an incremental innovation, need not be a totally revolutionary innovation. Also, uh, the second thing we look at is okay, fine, you are an innovator, you are a first mover, but can you maintain the competitive advantage? So, either through having some kind of a patent or some kind of a intellectual property protection or some expertise which can make sure that you maintain your competitive advantage, right? And of course, whether you have identified a proper problem statement, whether you have a good enough solution, whether the market is large enough, all of these typical things that we talk about are something that we look in our startups that we want to invest. So first step, something different, first mover innovation. Second step, whether they can actually maintain the competitive advantage of being the first mover in that space. Third, which is very, very important and sometimes could be a little bit of a challenge in a typical food startup, is the scalability of that model, whether it is scalable, whether it is hyper scalable. And that's why we see a lot of tech platform or tech companies in the food or agri tech which are actually getting funded. The aggregators are getting funded, not necessarily the food processors or the food products getting funded. And that is predominantly because of a scalability aspect. So today you may have one customer, can with the same infrastructure, you can actually have 1,000 customers and 1 lakh and 1 crore and so on and so forth. So scalability is very, very important. And I'm not talking from a food background, but any startup should think about it, or any investor should think whether how big or how scalable a particular business or a business model is. That's number three. Number four is whether the business will actually make money. And many times the unit economics have not been worked out, the business model has not been well defined, and that's where many startups, even though we like them, we reject them because we don't necessarily think that the business may actually make money in near future. And fifth, obviously, is whether the team will actually make money, and that's where we look at the founding team, their experience, their past experiences with regards to having some startups or something else. So having a well-rounded team. In fact, and there are a couple of deals we are also looking at right now, and we felt that the founding team is a very unidirectional. Both the founders are from technical background. They lack a lot of finance background. They lack a lot of sales marketing background, and so all-roundedness of the team is lacking, and that's why sometimes we reject. So to summarize, these are the five key points we look at. Something different, thoda hatke, innovation, first mover, clear definition of a problem statement, good solution provided. Secondly, whether they can maintain that hatkeness that they have identified. Third, whether they are scalable, especially highly scalable or not. Fourth, whether the business will actually make money. And fifth, whether the team will actually make money or not. So these are the five key things we look at when we personally invest in any startup. Second, to answer your question, which had few more parts to it, of course, any investor is looking at a 3 to 5 year kind of a horizon with at least 20-24% IRR. So that is the typical norms that we look at. But in some cases, it's okay to wait even longer because some business models may take slightly longer to mature and to start turning profitable and hitting its true potential. So the investors need to be more flexible, and case to case basis, they need to take a call as to what kind of horizon they should stay with any particular startup.
So, as we also focus as a VC that we should get a 3x, 5x, or 10x return in a horizon of 5 years. But could you just give an idea that like you are very much so as small introduction, you are also on the food Pathshala. So you do a lot of research and you create a lot of content on that. And also you are president of Chamber of Small and Advanced Businesses. So that two big bodies. So you must be so there are two questions which come in mind. One is the marginal business or evolutionary business. So which is better? So like what we should prefer and how do you think that what are the main hit that generally you get over here?
So I have also been an entrepreneur, and I had built couple of food businesses and have exited out of it, sold them. But they were typical brick and mortar. And in a typical brick and mortar business, the scalability, highly scalability becomes a little bit of a challenge. Secondly, in a typical food business, if I talk about agri business, you're looking at gross profit margins of around 20% and net of around 10%. If you look at a packaged food where you do a little bit of value addition to the agri produce, you might be looking at a gross profit margin in the range of 30-40%, EBITDA levels of around 20%, and net of 10%. Right. So as you go across the value chain from agri to food to different segments in that value chain, you may be able to get different gross profit margins. You will be able to get different EBITDA margins. You will be able to get different net margins, and these are important when investors are looking at you, because if you're looking at a as an investor, if you're looking at a 3x in, let's say, 5 years, then you're looking at an return of anywhere in the range of 24 to 30% IRR. And a typical pure agri space may not offer you that kind of a thing. And that's where an aggregator or a tech platform comes into picture. And you mentioned Foodtech Pachala. The reason I've, as an entrepreneur, also moved away from a typical brick and mortar to a tech platform is because it's an e-learning portal. And today I have one customer. My same platform can easily handle 1 lakh and 1 crore. So this highly scalable model is possible. And because of that, I can realize better gross profit margins, better EBITDAs, and better net. with the same cost structures that I have. So to answer to your question, every startup should try to bring in some kind of a tech into their business model so that they can avoid
So you are not audible. Sir,
to
you are not audible. Audible.
answer to your question. Every startup.
सुनाई दे. Yes, yes. Hello.
Yes,
Yes. So, like as you mentioned that you have been very much in experience in this, and so could you just give me idea that we always look for the trends, like what is going to be next in the industry. So, with the few years back, there's a D2C trend, which is also currently going on, and there are some trends like vegan foods, vegan proteins, and all these things. So, could you just give idea that how where you get the idea about the trends? What are the next trend first in the food tech and agri tech industry?
definitely. So, if you look at how Indians consume, we consume around 6,000 rupees per family per month in agriculture and food products. Out of that, hardly 7 to 8% are actually in the packaged form. Whereas if you look in the US or even in the countries like Thailand, Malaysia, and all that, they consume around 70% as packaged food. I don't think we'll
Okay.
go to the 70% target, but we will definitely reach to 30%. Yes, packaged food has its
Okay.
certain drawbacks, but it has a lot of advantages. One is increased shelf life, increased
Yeah.
nutritional value, convenience, availability. So I personally feel that packaged food, and I'm not talking about highly processed. You can still have packaged food which are healthy, which have the nutritional values, and that is the trend I'm seeing, that processed or packaged, but at the
Okay.
same time healthy, and providing convenience is one trend that I'm seeing will happen. Another I'm seeing is the uh, in terms of processing, innovative processings will be incorporated. Like small example, in the beverage industry, you will start seeing cold plasma. You will start seeing high hydrostatic pressure processing. You will see some
Okay.
other different types of processing rather than the historical heat processing or the pasteurization that we have. So a lot of other innovative technologies from the food processing side is something that we will see. Third trend
Okay.
I'm seeing, especially in the Western world, who do consume a lot of meat and especially red meat, where they have started to move towards vegan or plant based. But more than that, I think the trend that will pick up is what is called a cultivated meat or cell based meat. So it will be meat, it will be chicken, it will be beef or pork or whatever, but it will be lab grown. So the taste profile, the organoleptic profile, the lipid profile, amino acids profile, all the profiles of those food will be uh, like animal meat, but it will not be grown like we feed the animal, grow it for 2 years, 5 years, and then slaughter it. As against that, it will be grown in a lab. So that will bring down the greenhouse gases, and this whole climate change aspect can be taken care through the cultivated meat. There are a couple of startups who have already gotten approvals in the US and Singapore. There are two, three startups in India who are working in that space. And I think in next 3 to 5 years, a lot more players in this cultivated meat will become popular.
Okay. So we got one audience question, the Harsh Thakkar. So the question is, ki what are your thoughts on the popped chips versus millet based products? So like pop chips and millet based products. So which is going to come in the trend, and what is your thought on that?
So there are two, three aspects to any food product that you are consuming. One is the actual raw material. So let's say you're talking about a wheat or a rice or a potato or in this case millet, right? And its own characteristics or its own benefits is one aspect. Second aspect
Okay.
is the actual processing part. So you may, yes, millets are healthier than wheat or millets are healthier than some of the other grains. But if you are going to eat a deep fried millet, then probably you are better off eating a less processed wheat or whole wheat as a chapati rather than eating a deep fried chips made out of millet. So I'm trying to make your audience understand that one is the raw material level healthiness or goodness. One is the processing level healthiness or goodness. That uh,
Okay.
similarly, I can give you an example of frozen. Many people think that frozen is a bad technology. No, it's a tool. It's like a knife,
Okay.
right? How you use a knife, you could use it for a
Yeah.
good thing, bad thing. Similarly, frozen as a technology is a very beautiful technology.
Yeah.
But whether you use it to freeze a palak or a gajar or a meat at source, or whether you are using it to freeze French fries, it depends on the product. We cannot blame
Yeah.
frozen as a technology. So
Okay.
holistically, we'll have to consider what are the raw materials or the starting point, what is the technology that is being used, and how it will is what is the final form in which you are going to consume. And based on that, you can make a comment that whether a particular product is going to be good or bad.
Okay. So like as you also mentioned, the it all comes like as a startup owner example. How can I find that this is going to be the next big thing and I should work on that? Because suppose I exited one company, like as you exited. So what are the things I should focus and how I can find that this industry going to pick up? And same with the investor, that when they see a lot of startups constantly, it always in a confusion that okay, this is a next big thing, we should invest in this. Or in some cases, we have a confusion that this is just a trend, like a lot of people talk about uh, millets or frozen a lot of things. So how we can understand that in the deep, what is the strategy they should use?
So it again brings me back to the first point I had made, that you need to identify a problem statement. So if we
Yeah.
talk about the snack industry is here to stay, it's not going away. But what are the problem statement in the snack industry? Typically, snacks are high in fat because of deep frying. They tend to be
Okay.
high in salt or sodium content. So these are the two broad problem statements that any snack industries, your bhujiyas or your chips or any of those, and I don't know name any brands, but any snack
Yeah.
industry. So can you come up? It's not the potato which is a problem per se, right? So just making a
Okay.
millet snack is not going to solve the problem. It
Yeah.
is, and so there are technologies like air frying, which can reduce your oil content or the fat content of your product by almost 80%. Or you can
Oh,
have certain recipes um, where the salt content can be lower. Similarly, I gave an example of your cultivated meat, where in the US, the red meat consumption is so high. They eat beef and pork. And if you look at those animals, you're basically feeding those animals for 2 years, 5 years. So indirectly, you're feeding them 500 kilos or 2 tons
yeah.
in their lifetime to get 100 kilos or 200 kilos. So you are actually destroying value, right? By you're feeding 200 kilos of grains to get 100 kilos of meat. So that is like in my engineering terms, you're actually, we call it, it's a very inefficient kind of a reactor, right? So rather than that, and that's what the whole plant-based revolution is, that rather than going that route, can we use 100 kilos of grains to create 100 kilos of meat, or similarly
Okay.
cultivated meat where we can use cell-based and we can create it. Of course, it has another aspect to it, especially in the Western world. It is gaining a lot of traction, which is because that animal has lived for 2 years and has consumed so much food and has consumed so much oxygen and all that. It has also created a lot of CO2, and other greenhouse
Yeah.
gases. So this whole concept of reduction in greenhouse gases and climate change and all that. I don't know if we at India level we are ready to buy that as yet, but
Yeah.
definitely the Western world there is a big thought
Trend.
process
Yeah. Thought
trend,
process.
and that's the reason behind it. And so to answer your question, if you have a well defined problem statement, you can find a solution to it. You can
Yeah.
find bakery industry again is high in fat. Fruit
Yeah.
vegetable today they are facing post harvest losses. So if you can come up with solutions in supply chain, you can have it. There are every
Yeah.
industry is having its own problem statement. If you are able
Yeah.
to find a strong
Solution.
problem statement and a strong solution, rather than just finding a trend and saying okay, everybody is doing it, I'll also do it, then that the shelf life of that startup is also going to be very small.
So actually, I read one few case studies. Just one example. So there is a company which create a, like they create a fast food chains, and their main aim is to optimize the backend, and second, they give a good taste. And there is another. It's around the food FMCG also. It is around the food this restaurants also. But at the same time, as you mentioned, that quality or good food, it is very hard if I am doing very ethically. I'm planning a proper distribution. I'm not doing. I'm maintaining the whole quality sense and everything. But and when the part is a taste, I'm also maintaining. But how to showcase that part? So there are a lot of companies which come to us with a wonderful, healthy technology, but when compared to the counterparts, but at the same time, these people have economically make it viable. So what is the best strategy for these startups, or to understand that this startup will win? So what is the main strategy should we should focus on?
There are two things. One is either you spend a lot of money to create that awareness or branding or
Yeah.
do it for your particular case. The other thing is, and I will give you two examples without again naming brands, that certain we have certain perception. So when we eat chips, we all know they are all deep fried. So there came out a brand from a big brand company, took a very big brand ambassador, and they came out with the baked chips, right? So
Yeah.
human perception is that baked is better than fried.
Branded side, obviously, huh?
But if you actually look at the fat content in both of them, it's almost the same. Because if that much
Okay.
of the fat content is not there, the taste will not come. But
Yeah.
because they use baked as the USP, they didn't have
USP. Yeah.
to indirectly tell that their product is healthy. They are not calling their product is healthy because it is not. It has
Okay.
the same amount of fat. But because they are using people's perception that baked is healthier than fried, they were able to capture the market share.
Yeah.
Okay, this
Yes.
is one
Okay.
example. Another example I'll give you where typically we eat ice cream, and we all know the biggest dairy in India and their brand, right? So ice cream traditionally has been made with milk, but
Hmm.
another big brand was innovative enough where they mimicked milk with vegetables. So milk fat, you use vegetable fat.
Okay.
Milk carbohydrates, you use vegetable carbohydrates. Milk proteins, you use vegetable proteins.
Vegetable.
And you mix it, and you will get the same taste and all that. So they came out with this. So this big brand got angry, went to FSSAI saying, "Hey, listen, they are calling it an ice cream, but it's not." So they had to create a different category called frozen dessert. Okay, where you
Okay.
are allowed to use all these vegetarian
All this
sources in
thing.
the
Yeah.
milk. Now that bigger brand was saying, "Arey, ours is ice cream, theirs is frozen dessert." So somewhere frozen dessert was viewed as a inferior product. But today, this same frozen dessert company is saying ice cream is more premium or dessert is more premium. So now they
Okay.
are saying कि आप तो मिठाई खा रहे हो, आप डेजर्ट खा रहे हो, आप तो पहले आइसक्रीम खाते थे, today you are eating dessert. And that's how indirectly now they are saying frozen dessert is a superior product to ice cream. So that same story, depending upon the perception of you and me as a consumer, they have tried
Yeah.
to change over that. Even though on paper or dairy industry will think that frozen dessert is inferior to ice cream, end consumer is thinking, "अरे मैं तो dessert खा रहा हूँ, मैं आइसक्रीम थोड़ी खा रहा हूँ, and I'm eating frozen dessert." So they the same thing they have very smartly turned it around, and they're saying frozen dessert वाले हम आइसक्रीम वाले नहीं है.
Yes, that's a nice idea. So one more thing, like one of the question also asked by the Jyoti, she's from the agro industry. So is vertical farming and hydroponics. So currently these two trends are there. So could you, like, if I want an investor and I want to invest, or so could you just give me idea that what is the better and how we can evaluate the both?
So, as far as hydroponic is concerned, not every crop can be grown under hydroponic. There are
Yeah.
certain crops that can be grown. The other day, I was listening to another expert, and he mentioned that our vegetable consumption, almost 80% of our vegetable consumption comes from like seven crops, like the likes of
Okay.
tomato, onion, potatoes, and seven crops. I don't know them top of my head, but we all know. We go to a
Yeah,
bhajiwala
yeah.
7 week, and these seven crops are contributing 80%, and none of them can actually be grown hydroponically. So now you are working in that other 20% basket of people in which these hydroponic things will get in.
Yeah.
So it's still a very niche, early stage kind of a thing. And today, India is operating still at around what, $3,000 per annum per capita. And like I can work it out, but you, since we have less time,
Yeah.
you take it from me that our family basket per month is 6,000 rupees. So if I have to
Yes.
now transfer that palak ka 10 rupees, 20 rupees ka judi with that hydroponic, I don't have that much appetite as a
Okay.
country in that 40 crore households of India, right? So you may
Yeah.
find only 1 lakh households who may actually be ready to
Pay for
you
it.
pay for it and get it into your basket. So the same logic applies for an organic or even all this
Maybe.
vertical farming and all that. But will it happen? It will happen. It may happen in India. It may not. Like I have a very close friend in
Yeah.
Singapore. He's running a multi-million dollar economy business in Singapore with vertical farming,
Yes.
because
Okay.
when you have
Nice.
smaller areas and large population like what we have in
Mhm.
Mumbai, now Mumbai cannot grow. It has to grow
Yeah.
vertical,
One, three.
right? So even you'll start seeing flyover ke upar flyover, uske upar flyover, like you see in Shanghai or Beijing. So that's where vertical farming and all those things can get popular in Mumbai, Pune, or metros and all that. But still 70-80% of Indian population is living in rural. So there it's
Yeah.
not vertical farming land. They have enough land. They don't really have to go vertical. So
Yeah.
if may happen, but I don't see it happening that fast, at least in India. Probably in some other countries it will happen. Like recently, I was in Dubai, and like how we have a Make in India kind of a thrust, even Dubai
Yeah.
is
Yeah.
talking in Make in Dubai farming kind of a thrust. So places like that may have good potential.
So, like, as we have a short time, thank you for your presence. Just a final question. So, could you give one advice to the angel investors or the about investing in food tech startup? Why they should prefer? Because people are considering this is going to be next trend. Like once upon a time, the SaaS and AI, SaaS and IT was the trend. Now AI and the food tech, agri tech will be the next trend. So, could you just give idea that what one advice that you think the investors, angel investors or LP, they should think before investing in food tech?
So investors are also playing a very crucial role in this whole ecosystem, and we should not have only ROI as the basis. Yes, maybe ROI could be number one, whatever X you want, but our ecosystem is also getting destroyed partly because of the this whole valuation and the pressure of valuation and all that. Many businesses take a lot of take longer time, especially food business. They do take longer time to sustain, and so the longer it takes, the longer it will sustain. Let us not make them into bubbles by putting unnecessary pressures and doubling their valuation in 2 years, 3 years, and a lot of them become unsustainable. They may have a good product, they may have a good business model, but sometimes we are also to be blamed for unnecessarily and again, I don't want to name brands, but there are so many who have raised money at such high valuations that it becomes unsustainable. So
Yeah.
that's my advice, that let us also as an investor also talk about sustainability of the startups and
Yeah.
the ecosystem rather than just talk about investing in sustainability startups, right? So let us be aware, put ourselves in the shoes of the founders, because especially food tech is a difficult area. It's not uh,
Hmm.
a me too product, highly competitive. Like DMart, for example, has almost 60,000 SKUs on the shelf. So I make a
Yeah.
product doesn't mean it's going to sell on its own. So I have to put in a lot of time, effort, money. So please give me also time to survive. It's not, I cannot just be like a bubble all of a sudden. Ekdam phuk gaya. It's very, very difficult for products, especially food products, especially.
Okay. So, like as you also mentioned, from investor perspective, the exit is also one of the important play. And we have seen that there are few companies like Marico, Mahindra, they give a wonderful exit to the food tech, agri-tech startup. So, could you give one? And a lot of investors, the LPs, are from the food industry. So they are which we have also. So could you give us some advice to this, how they should look the startup for the exit perspective, like they invest but they at the same time how they should see for the exit perspective, like the companies, FMCG especially.
So, I mean, two parts to this question. We all know how an exit happens for an investor, typically buyback or another investor comes in or an IPO. So, I'm not going to
Yeah,
touch upon because I'm sure most of you are
that's what.
more knowledgeable than me. But in the food industry, especially, what is happening is a lot of consolidation is happening. Now, even Reliance
Okay.
has entered into it. They are like, yeah, if you have watched cricket or even soccer football matches going on, you're seeing the Campa ads coming in. So they bought
Yeah,
Campa. Now the whole cola range of Campa is coming in. So now Reliance is buying a lot of brands. They are going to have their own range of chips and biscuits
yeah,
and all. So similarly, a lot of other bigger companies, even Tata now has all these, and on the
so
Nuvo, they have everything. I think they have bought Big Basket, they have bought your paper boat, and they were in talks to buy Bisleri and all that. So lot of consolidations are going to happen. So the way I think we should work in this space is, and also startup founders also should have that mindset, is take them to 100, 200 crore level. And I'm sure there will be a lot of buyers who are interested in
buyers.
these 100, 200, 500 CR kind of, like you mentioned, Marico. I think Marico bought Plix at some
Yes,
uh,
yeah,
so that is the key, that you get in when they're at 5 crore, 10 crore, groom them, take them up to 100 crore, and at that time, also hopefully the founders have that mindset where you get acquired to some of these big players. You have the likes of HUL, you have the likes of Marico, the Britannias, the Reliance, and almost everybody is looking to acquire brands per se. So focus on brand, focus on top line, and I'm sure exit through
yeah.
acquisition is something that will happen.
So actually, we also seeing a lot of interaction where people, a lot of big companies are looking for the strategic investment, and we always say that be like a exit partner, be with them. So this is always the fiction is there, but I think that in future we will see many Indian brands, Indian companies. We acquire a small company also. We acquire these brands, these new startups, and make their considered whole product system to go faster.
Correct.
Yes, so thank you so much to be on the podcast. We have a few more questions, but on the chat, but I think we have a limited time. So thank you so much. Yes,
Thank you,
thank
Rohit,
you,
and all
thank
the
you.
best to everybody. Thank you.
And this podcast will be published on LinkedIn, Instagram, and YouTube. It is live currently over there, and it will be live over there for all audience to just for interaction purpose. Yes, thank you.
Thank you. Bye bye, everybody.
Bye.